Hello, everyone, and thank you for joining us today on the Dairy Signal. We are going to dive into a recap of what's happened in the past 30 days and answer some of your lingering questions from Business Conference with two fantastic speakers here this afternoon. But before we dive into that, it wouldn't be a Dairy Signal without a little bit of today in history. And now I found this one interesting because the Ford Mustang is a name and idea that we all know exists, and we all see those cars driving around. But it was on this day in 1949 that it debuted at the World's Fair in New York. And fun fact, it was actually named after a World War II fighter plane, the Mustang. So that is how we've got that iconic name and car that has come around here, still around, driving on the road in some capacity to this day. But let's jump into why you're here. And that is because we have Jacob Shapiro with Cognitive Investments and Dan Basse with Ag Resource Company joining us again. We had them on a business conference about 30 days ago. And if you know that anything and everything has changed, it feels like since then. And we have the list of questions that you all asked during business conference that we just did not have time to get to. So we're going to start with a little bit of what has happened since. Kind of giving you a little bit of a lay of the land, and then we're going to dive into your questions. So this is one of those episodes where if you've got anything and everything that you are wondering for Jacob and Dan, it is your time to shine and ask those. So you can use the Slido feature to the right of your screen if you're on a desktop device. And if you're on a mobile device, you can type your questions in down below. But without further ado, we are going to jump right into things. And I'm going to turn it over to you, Jacob, to give us a little bit of the skinny about what's happened in the last 30 days.
Well, we've been liberated. We had Liberation Day. I hope you're all feeling supremely as liberated as I am right now. Um, when I was with you guys at business conference, my main point was that I thought Trump was bluffing because the alternative would be disastrous for the U.S. economy, and that is still my base case. I also think there's a disjuncture between what the Trump administration says it wants at a strategic level, its goals, and then its honestly incompetent tactics. So the strategic goal, we can disagree about whether it's the right strategic goal or the wrong one. It makes sense. I could defend it, full-throatedly if I wanted to. Like, it makes sense to want to build an America again. It makes sense to protect American industries that have been hurt by globalization. It makes sense to go after inequality. It makes sense that Wall Street's been profiting for decades, so let's go to Main Street. Like, all ideas that, you could really give a lot of it wouldn't be hard to support sort of rhetorically. But we've sort of reached this point with the Trump administration where the tactics that they've chosen to achieve these goals is making them fundamentally impossible to achieve in the first place. You cannot have any country or any company decide to make decisions about whether to trust you or how to invest or how to allocate capex if they don't know what's happening on a daily and weekly basis. In just the last 2 weeks, I'll read you, a little list of I put together with what happened in just U.S.-China relations. So this is just the last 2 weeks. We hiked tariffs on China to 30%. China did nothing. Then we hiked tariffs on China to 84%. China responded with matching tariffs. Then Trump took them to 145%. China matched those tariffs and then literally in a document or in an official statement called U.S. policy a joke and said that it wouldn't retaliate any further. The Trump administration then leaked to the press they really just want Xi Jinping to call Donald because if President Trump and President Xi can get together and hammer this out, there's probably going to be a deal. Xi Jinping didn't do anything. That's not how China works. Chinese president doesn't get on the phone unless there's already a deal in place. He doesn't go into rooms negotiating with people. Trump, again, in a public comment, said he was ready to make a deal. China didn't do anything. Trump then exempted semiconductors and other critical Chinese exports from tariffs. And China responded to that by suspending exports of critical minerals and magnets that are critical to the auto, semiconductor, and aerospace sectors. And then yesterday, President Trump said, fine, here's 240% tariffs for you on China. That's just the US and China. That's just the last 2 weeks. That doesn't work. It doesn't work for businesses that are trying to figure out what they're doing. It doesn't work for exporters who are trying to think about how they get access to the Chinese market. So we can agree or disagree on the nobility of the strategic goals. But what's happening is the way that the tactics are being used to roll out these strategic goals sort of makes it a moot point because these tactics are not actually going to further those things. Now, I've said all of that. The thing about Liberation Day was that President Trump raised tariffs not just on China, but on a bunch of different countries. He has since come back on a lot of those, gave a 90-day exemption. But economic theory suggests that when you apply tariffs in that manner, you expect the currency to strengthen and you expect yields on debt to go down. And the most disturbing thing that happened on Liberation Day was the opposite. So the dollar has been steadily weakening since then, and yields have been going up. And that's probably a part of the reason that Trump balked in the first place. My fellow Louisianian, James Carville, once said that if he was reincarnated, he would want to come back as the bond market so that he could intimidate everyone. Well, the bond market was scaring the living crap out of the Trump administration, and probably specifically Scott Bessent. I bet Bessent was running over to the White House, freaking out because of what was going on with yields. And the reason that that's so important is because it's telling you that there's been a loss in trust in the US government. You've got capital now that is leaving the United States. You've got doubts about whether the dollar is a reserve currency. You've got doubts about whether treasuries are the best safe haven in the world. You've got Swedish pension funds and Danish pension funds saying, we can't invest in the United States. We're going to invest in Europe, or we're going to invest in Sweden, or we're going to invest in somewhere else. That's a major, major shift. And I think what you're going to see happen here over the next 3 to 6 months, I think Trump is a deal maker. I think he wants to slap his name onto every single deal that we're probably going to get in the next 3 to 6 months. And I would be surprised if we didn't have a US China trade deal in the next 6 months. And I would be absolutely gobsmacked if we don't have a renegotiation of the USMCA by the middle of next year. I'm honestly most nervous about US EU relations. That seems to me like neither side is willing to play ball. But at the large scale of things, I think you're going to see that Trump is really just negotiating and trying to make deals. And the last point I'll say on all this before turning it over to Dan is this goes back to my main point about tactics versus strategy, because we're not talking about strategy anymore. The tactics are such that, yes, he will probably get short-term wins. Like a lot of these countries will probably make deals. They'll go to Mar-a-Lago. They will say the nice things. They will give some short-term concessions. But I think in the long run, most of these countries, if not all of them, now see the United States as an unstable actor. And so even if you get a short-term reprieve in some of these trade deals and the market calms down and the media comes down, I think something has fundamentally been broken in how some of these major poles, whether it's China, whether it's India, whether it's the European Union, are dealing with the United States. Now, if you're asking, well, what does that mean in concrete terms, Jacob? This is a low confidence interval, but my base case scenario right now is expect a recession in the next 6 months. I don't see how we don't avoid a recession based on all of the stoppage and investment and all the disruption in markets and things like that. But then I think things might start to look like they're getting better. And I think the Trump administration might do a mission accomplished sort of banner and take a victory lap and say, see, didn't it all work? And the point that I want to leave you with is underneath the surface, all of these different countries are scurrying around figuring out how 2 years from now, 4 years from now, 5 years from now, they don't have to do whatever the White House wants, whether it's President Trump or somebody else in office. And at that point, I think the US economy is going to be worse off for it. Our access to export markets is going to be worse off for it. And we're really going to have to watch which of these countries is able to develop some of those either other markets or its own self-sufficiency or some of these other things, and which ones are just like Mexico or like Canada too far intertwined with the United States that they don't have a choice, but they just sort of have to go along with it. So everything can change like in a minute. But honestly, I feel like I have more clarity about where we're going in the next 3 to 5 years because of what happened on Liberation Day and some of the signals that we've seen since then. So I would buckle up for the next 3 to 6 months. I think at the end of it, everybody will try to tell a story that it was successful. But I think the patient may have contracted sort of a latent illness that will become manifest over a period of years. So I think you have a chance here to sort of prepare for some of the difficulties are coming, but this is the chance. Like this is the chance to prepare for a much more volatile and competitive world where there is less faith in the United States going forward.
Well, Jacob, I mean, you've already sparked a lot of questions that have come through. So I have to say to those listening, hold on, we'll get to them in just a moment. We're going to head over to Dan to give us a quick update of what's happened in the ag markets and that side of the things. And then we'll get to your guys' questions. So Dan, take it away.
Yeah, no, in the ag markets, we've rallied. We haven't declined, we've rallied. And it's a little bit contrary to what happened in 2017 and 2018. And so when you think about the world, we at Ag Resource are thinking about an actual decoupling of the United States and China. I am not optimistic on a trade deal. I do not think one will get done. And so I think as you look at China, which is buying the board in Brazil in terms of soybeans, they bought so many soybeans last week, close to 80 cargoes I can't count, and they're still buying this week. So for China, they have to buy the beans that they need, and they are doing it in style, which has rallied the soybean market and to rather sharp gains. Milk prices have come back. corn and wheat demand has been stellar. And so we're actually seeing some very, very good demand. Now, where I worry about is going to be what I say, the period that China doesn't show up for US ag commodities, which will be from mid-September until middle of January. I say that only because they're the biggest grain buyer per se. They are important in our milk markets. But when we look at soybeans, that's where there's going to be a hole. So today, China's buying so many soybeans in Brazil that other countries are coming to the United States based on lack of availability. And so for me, the Chinese have this view that indeed they are not going to enter into a trade deal because they're buying soybeans as far out as September, October from Brazil. They're trying to make amends to fill that hole and avoid the United States as much as possible. So when I step back from it, I believe the Trump administration is going to try to do trade deals with as many countries that are non-Chinese as possible, segregating the Chinese to the side, leaving them for a later day. And this is really about a duopoly, as we think about it in ag resource, where they're splitting of the world in terms of trade patterns, and how this all looks and going forward is going to be important. And I do think the Trump administration, from what I'm being told, is looking at longer term trade negotiations, not for just the next 3 years, but maybe even longer than that. So can it pull in a Japan? Can it pull in a country like Vietnam that imports 13 or 14 million metric tons of corn, but none from the United States? Can it pull in India? We had Indian discussions last week. India does not buy GM products, but the Trump administration is trying to force that avenue. Also, the Trump administration wants them to buy vegetables and vegetable oils and wheat. So there's a lot of things happening under the cover. You know, U.S. agriculture was struggling because we were looking at failing trade and having problems with negotiations. We'll see how this all goes, but I believe that when everything is done at the end, we're going to have China and a few other countries like Russia and maybe Brazil on one side, and then there's going to be another side, which will be the United States and some of these other allies that it's going forward with. And this will change, to Jacob's point, pessimistic when you think about one of our biggest ag customers, now number 3, being segued to the side. But you know, Mexico and Canada continue to be very strong buyers, and so that's giving me some optimism and some hope. And I think the ag markets are reflecting it accordingly.
Well, Dan, thank you for that update. It's been interesting in the last month or so, and so I know those who have questions, encouraging you to type those in now. I'm going to start with where we left off at business conference, though, so we can see kind of what the thoughts are and what's changed after we have the lay of the land here, but also going forward. So Jacob, you already mentioned this, and you said probably in the next 6 months or so, but can you maybe further extrapolate as to why you think there's a chance of a U.S. recession in 2025?
Sure. And I just want to say this is Dan, I'm so happy that we disagree on something. I feel like usually I'm like sitting in the background, like trying to figure out what I'm going to say because we agree so fervently with each other. But this is great for the audience because it's really important to see that like Dan is talking about a US versus China world, and I'm thinking more of a multipolar world. I'm thinking trade deal. Dan is thinking no trade deal. By the way, a trade deal doesn't mean that the Chinese are going to follow through on it. Like I think there'll be a deal. If they can get soybeans from Brazil, they'll do what they did in the phase 1 trade deal. They'll say they're going to buy soybeans and then buy them from Brazil. The problem, it might be better for the U.S. corn farmer as it was during phase 1, because if global corn supplies are tight, they can't get those things from different places, then they probably will come to the United States. But just to say, like, there's a difference between a deal and a difference between sort of China coming through there. But yes, as for a recession, I mean, you guys know I work directly with investors who are, helping them manage portfolios, high net worth individuals and families. I also work consulting with a couple of different multinational companies that have supply chains across a lot of different disciplines. And no matter who I'm talking to, whether it's farmers or tech companies or high net worth families, things like that, I'm getting the same thing: paralysis. Nobody knows what to do. And so everybody has put their strategic plans on pause. The only ones that are really sniffing around are investors, and they're, bargain hunting or trying to think about the right way to play the Fed. And that's a little bit too much for me in general. But when I'm talking to these companies, when I'm talking to some of these people, they're just not making moves. They're stalled out until they can get some more clarity about what the direction of policy is, which is why I say, okay, like recessions in some ways are backward looking indicators. By the time that we know that we're in the recession, probably we're already through it. That paralysis, that freeze, I think is going to mean technically we're going to be in a position of contracting economic growth, which is all a recession really is. I think it might be mild because I think that the Trump administration cannot afford not to give some clarity relatively soon so that the paralysis does not continue, so that the dollar doesn't continue to nosedive, so that yields don't continue to rise. Um, and if I'm wrong about that, if they continue to double down on some of these things that they're doing, they risk making the recession longer. Or, I mean, Trump said in an interview a couple of weeks ago, "Oh, we don't, a little recession might be okay, but a depression is what we're trying to avoid." Well, you keep doing this where you're, whipsawing strategy and policy every other minute, you absolutely could get to that sort of scary. But I'm rambling there and going off. So the reason I think a recession is baked in is because I know from the first quarter before Liberation Day that a lot of these different people that I talked to were frozen and they were waiting for clarity and they haven't gotten clarity yet. And for me, I don't normally I don't normally stick my neck out there saying recession or not recession. I don't try to time the market and I think it's unproductive, but I don't see how anything else is possible with the amount of paralysis and uncertainty that I'm hearing from all the different corners of the market that I'm interacting with.
Well, it's very interesting that you say that, especially given I know in the last few weeks that it's been in the headlines nonstop is, are we in a recession? Are we going to go in a recession? So I know it's on a lot of people's minds. So thank you for weighing in there. The next question we have here is more towards Dan, and it reads, what are the current tariff rates on the U.S. dairy product exports to our largest trading partners?
Well, our largest trading partners are North America, Canada, and Mexico. And the Trump administration continues to get the tariff rates wrong. When he's talking about Canada, we send most of our dairy products into Canada until we hit a trigger tariff level, which hasn't been reached in years. So that's at zero. And so he did this agreement, USMCA, and he still continues to mistalk about that a little bit going forward. When you look at Mexico, there's also nothing there. When you look at China, we are back at 245% to Jacob's point. So, we are not going to be sending any U.S. ag products to China at all, period. They come from somewhere else. And so we will lose the Chinese dairy market. The question is rerouting it and trying to find other places to look for supply. And it's more difficult in dairy, if you will, than maybe soybeans, where Brazil can supply all the soybeans to China. China will have to go without dairy product because there's not enough in Oceania to take care of them. So as you think about it, there's going to be this ag supply chain changing that's going forward. The world will reroute. And some of that is bullish, some of that is negative, and it all depends on timing. In terms of the soybean market, it's bullish nearby, but it's bearish when we think about the new crop when China's not there to buy our products. So it's all about the structure of how this ag trade is manifests itself. And again, with these kind of tariff levels, maybe Jacob's right. We do get some kind of deal at some point, but the insistence that I'm seeing from my Chinese clients is they're just going to Brazil and they're going to leave the United States alone and they're going to go to Oceania and buy as much as they can. And that's the Chinese mentality. It's not about price anymore for buying Brazilian soybeans or let's say Oceania dairy products. It's making sure the Chinese have the supply, not the price. So they're paying anything they have to get that supply around them.
Okay. I want to ask a little bit more in specific to, dairy and dairy markets, especially here. And I believe it was a couple weeks ago when I was on with Ben that he mentioned that cheddar and butter, and please correct me if I'm wrong, was still the lowest on the world for price. So has that been impacted by what's happened in the past few weeks with our trading partners on, those two commodity fronts, or has it had no impact?
No, it's had virtually no impact. We are still the cheapest. We are still the supplier of low cost competitiveness. Butter is still something that's going to be sought out by the world. And so I'm actually, as I think about the milk markets in terms of what maybe some of these trade deals will do, and that's the problem, Amber, as we think about these trade deals. If Trump is really going to do these trade deals as needed and look at every commodity, every code, then this is going to take a long, long time. I mean, we're talking a year or years. If he's just going to be taking a trade deal and saying, okay, Mr. Country, if your trade surplus is 20 billion and you promise to buy 17 billion, we're all good. I think he needs to go more granular with that. And so we in the analytical field look in terms of what they will be buying, from whom and what. If dairy products are specifically mentioned, or energy or grains, I think that's where this all becomes important to the marketplace. And that's what we as analysts in agriculture are looking for, is a little more of that granularity than these big, bold promises, which may or may not come true.
Okay. Thank you for that clarification there. I'm going to head to some of the Slido questions here because we are definitely in this tariff talk right now. I mean, it's kind of the biggest buzzwords and news that we have going on. And we've got some questions from listeners on that. And the first one here reads, was it a bluff or was Trump demonstrating a willingness to swing TR's big stick? So I'm assuming that one can go for Jacob, but that's what I got there. So.
Yeah, Teddy Roosevelt's big stick.
Yep.
Teddy Roosevelt is rolling in his grave at this foreign policy. Remember, his philosophy was speak softly and carry a big stick. So if you were following the Teddy Roosevelt thing, you'd be very polite and very quiet. And then when they least expected it and they didn't do the things that you were asking, then you wouldn't do this 30% back and forth exemptions. You'd be like, okay, fine, 245% until you come to the table and I know you're serious. That would have been how Teddy Roosevelt handled this. So let's not like call Teddy Roosevelt into this sort of thing. I think you're exactly right. That is what a bluff is, right? Like you're trying to show strength, you're trying to show that you mean it. I'm from the school of negotiation that thinks that the moment you actually have to pull the lever, you've actually used your leverage. These threats are most powerful when they are threats, when the sword of Damocles is hanging over your head and the other side thinks that there's actually a deal to be made. So yes, perhaps President Trump is thinking of it that way. And hey, he's a billionaire real estate mogul. He wrote The Art of the Deal. Maybe I'm just a nerdy, wonky analyst who is not fit for negotiating with Xi Jinping and some of the other great powers, and I'll have to eat my lunch or eat some of the books that are behind me because I'm wrong about this. But at least from where I'm sitting, no, this wasn't the big stick. This is speaking very loudly, and then when push comes to shove, saying, okay, but we're going to exempt all the stuff that actually matters, and Xi Jinping, please give me a call because I would really like to make this deal really soon. That's the inverse of the Roosevelt principle. And honestly, the country that is employing what you're talking about is China. China did not respond to the first round of tariffs. They have been very muted in how they've responded so far. When the tariffs hit that, what was it, 125 or 145% level, I can't remember, they literally put out a statement that said, this is a joke. We're not engaging. Call us when you're ready to talk. That's it. Like, we're not going to continue this charade anymore. Like, that's the country that is actually like this. And I'll just say this is the other reason why I think Trump is bluffing and why he's wrong to take tariff policy from the late 1800s, early 1900s and try to apply it today. President Trump talks about William McKinley all the time. William McKinley was president of the United States when we were the up and coming manufacturing superpower, when we were the ones that were displacing the British Empire and Germany and all these other countries. All that was coming to us because we had way more capacity and everything was cheaper and we had the commodities and everything else. Today, the country that most looks like the United States in the late 1800s is China. They're the ones with 35% manufacturing market share. They're the ones that make the inputs that go into the ibuprofen I'm going to give my daughter for her ear infection later, or for the little toys that I buy her, or for the keyboard that I want on my computer. We don't make these things in the United States, and nobody in the United States wants to make these things. If you look at the polling numbers, there's actually a lot of support for the idea that we should manufacture things in the United States. But then you ask the follow-up question is, and would you be willing to work in the factory? 80% are saying, no way, like find somebody else to work in the factory. And if we're not going to spend the money to retrain the workers, or if we're not going to pass immigration law reform so that we can legally get migrants into this country who could be trained to work in the factories, then it doesn't matter if you have the greatest factories in the history of all the world. Nothing's going to happen anyway. So yes, I think the questioner is right. I think you're right that probably if we're in Trump's shoes and we're trying to understand him, he's thinking that it's a show of force. But if somebody like me who wants his government to succeed, looks at the data and says, that's probably, that dog's not going to hunt. Like, that data doesn't support you. How do you think the version of me that's in China that is advising Chinese companies, what do you think they're saying to the Chinese businesses and saying to the Chinese government? They're saying, you've got them. Like, just keep pushing. Like, our pain tolerance is greater than their pain tolerance. I think that's the right way of looking.
Okay. I was going to say, Dan, if you have anything to jump in.
Well, I was going to say, Jacob, didn't Trump say in his last term that there's two emotions that he is most fond of, and those emotions being fear and love? And if he had to choose one of them, it would be fear. And so, to me, this is all about fear in terms of him striking fear into as many people as he can to see what kind of deal he can negotiate. So I'd like to think Trump is a historian and looks back at some of these people. He brings it up, but at the end of the day, I think he's still just as you say, a real estate dealer that strikes fear to get the best deal, and that's what I think he's doing today. So
I'm sure, Dan, that he was reading Machiavelli's The Prince late at night and came across that line and was like, you know what, this is pretty good. I'm going to put this on Truth Social.
I
I'd
think
rather
you're
be
right. I think you're exactly
feared
right.
than loved. The problem is he's not going to be feared or loved. I know I've said this 2 times already, but I'll say it a third time. The Chinese literally put out an official statement that called U.S. tariff policy a joke. Nobody's afraid and nobody's in love. They're laughing and they're figuring out what things they need to do to live in a future where they don't have to depend on the volatility of the United States going forward.
I think that is something a lot of people are thinking about, especially as we're discussing this here. And the next question is still on this tariff mark, but this one reads, do you feel that the Trump tariffs were really thought through with going to all countries, even an island of just penguins, or was it done to cause noise and fear?
Well, I'm still on the noise and fear, Amber. I just think that's the way this man operates. And so, he's going to strike fear if he can in his trading partners with the United States. He believes being and it's true, the largest economy in the world. We'll see it how it works, but the turbulence that is produced in between is something that, whether it's financial markets or economists, we're all very dreadful about, and it just causes lots of anxiety that I feel in clients and across the Midwest. So that's how I would end it. But fear is one of those emotions that it will leave scars longer term, to Jacob's point. So I do worry about the recovery of this longer term and the position of the United States and the nationalism that is going around the world currently. So we'll leave it at that.
Yeah, I would just add that I hope that a lot of thought was not put into the rollout, because if it is, they are truly morons. It seems to me that they did just something really quickly to get it out the door. If they thought about this for a long time and this was what they landed on the perfect way to roll out this policy, then everything that I've said, like, forget about it. Then we're just dealing with idiots. And I don't think they're idiots. I think they're smarter than that. I think the questioner is exactly right to say this is more about theater. And then we can argue about whether, the theater is going to achieve the goals or not. Obviously, I think it's not, but I'm open to the idea that maybe I'm, just the wonky analyst who doesn't know the art of the deal. The only other thing I want to add there is, you see a lot of comparisons in the media right now to Smoot-Hawley in the 1930s, which is the last time we really had tariffs like that. And I just want to plant the seed in those who are watching's mind that there's one big difference between today and what happened with Smoot-Hawley. I mean, there's a couple big differences, but the big one that I want to put in your mind is that Smoot-Hawley was a time of global protectionism. So all countries were raising tariffs against each other. Other countries are not doing this to each other. This is the United States rolling up the drawbridge, and all these other countries are looking around being like, okay, maybe we should make deals together. So last week, for instance, the EU was negotiating with China about dropping tariffs for Chinese electric vehicles to come into the European market. So basically waving the white flag and saying, okay, China won the EV race, we'll import your EVs. At the same time, they started negotiations with India about India raising tariffs on European-made cars, because they were betting the wealthy Indian class still probably wants to drive the BMW or the Mercedes around, so maybe we're not going to export into China, but maybe India will lower some tariffs for us as part of this free trade deal that we've been negotiating now for a decade. And maybe that can be a way that the European auto sector continues forward, even as we do something pragmatically to strengthen ties with the Chinese market. I tell you that example, and the difference I want to draw between Smoot-Hawley and what's going on is that all these other different countries are talking to each other and trading with each other and negotiating with each other. It is not every single country isolating itself and we're going to have a deflationary spiral leading to a depression like we did in the 1930s. We're hurting ourselves and losing market share as a lot of these other different countries say, oh, the United States has retreated. There is now a vacuum here. What are the ways that we can fill this vacuum with our national champions or with some of our entrepreneurs or maybe even our state-owned companies and things like that? So I think it's a really critical difference in framing like how these tariffs are working and how it's different sort of than previous tariffs and in some of the analogs that have been called out there by both those supporting the tariffs and those who are against them.
Interesting to think about. Next question here, we're going to switch gears just a little bit. I'm not ignoring the other questions that are on Slido, but I want to get back to some of the ones that we had remaining from business conference. And this one is very much thinking about U.S. agriculture, especially dairy and dairy on beef. And the question reads, with beef on dairy demand at an all-time high and replacement heifers are at record lows, do you think low replacement numbers will have a significant impact on the beef on dairy prices, or will they be able to sustain the highs they are currently experiencing?
Well, Amber, we're pretty positive on beef on dairy. I mean, we need by our analysis about 920,000 additional dairy crosses or dairy bull calves or whatever you want to say coming forward. So this is to fill the hole that's produced by the U.S. beef cow herd that is at its lowest level since 1961 and still declining. We're still seeing no indication of expansion in the U.S. beef cow herd. So I don't know how that occurs at these record prices. And so if you think about these dairy crossed bull calves at $750 to $900, I don't see that going away. So if I'm a dairyman, I'm planning on the bottom 20, 25% of my herd on, doing that dairy crossed semen or embryo to make sure I have that kind of calf available. It just makes too much sense. You will make more money on that calf than you may make on that cow milking her all year. So it's something that needs to be in every herd. And I just don't see an end of it. In fact, the dairy industry plays a very important role in that supplying those animals so we have enough beef in this country going forward.
Well, and I want to expand on that question just a little bit here, especially as we think about, I feel like on the dairy signal, when I've talked with you, either you or Ben in the past, we always say, well, maybe in 26 or 27 when the beef herd changes. And it's always a couple years out. But do you actually see that the beef on dairy, ever fading away given the structure that where we're at in agriculture? Because it's been kind of a necessary commodity, especially the past few years to keep the beef production where it's at.
Well, there's one word Jacob and I never use is never, so we'll be clear on that. As you think about the future, I do believe this is something that will be lasting. The average cow calf producer is aged, elderly, if you will. He is up into his upper 60s, 69.3, I think was the average USDA came up with. So with that in mind, I don't see a way how you consolidate or make that cow calf operator produce enough animals going forward. So the market's trying to provide the incentive for that to happen. It's been happening now for 3 years. So far, we haven't reached that magic point of whether it's $800 a calf or 1,000. We still don't get the expansion. Remember, when we get herd expansion, we are taking she animals out of the herd, and those she animals create even a wider beef dislocation. So the bull market is going to continue at least through 2028. Beyond that, it's always murky because if we have recessions and other things, I'm not quite clear, but in terms of demand profile. But today, the U.S. consumer has been willing to accept retail beef prices at $8.70 a pound and calf prices that are soaring along with feeder cattle prices that likely will reach $300 somewhere in the next, we believe, 12 months.
Okay. Thank you for that insight, especially as it's something that a lot of producers are thinking about and or trying to figure out how long or what my breeding strategies look like. So that's always a top of mind. And the next one is definitely still in the dairy space here as it reads, what about bird flu and dairy? Straight to the point, the question.
Yeah, it's the migration is starting back to the north again. We're all worried about droppings and whether our farms will be infected. At the moment, USDA is being demolished. I shouldn't maybe use that word. There's a demolition. I mean, they are going to see its staff go from 101 to maybe, I believe, 45 to 50,000 before it's all done. So the bird flu and the veterinary folks that are looking into it are diminished. They've got lots on their plate. I'm thinking at the moment that we'll get through another migration without a lot of concern. I think at the moment that, again, it's in our herds, it's having some capacity and production output degradation, but I don't think it's anything that, as I think about it, that has at least crossed species yet to the humankind that is going to make us or make others avoid dairy products nearby. So that's what we're always watching. But today, so far, we're moving ahead just as we did last fall with the migration southward. We're not seeing at least much of a change, though it's early days for the migration northward.
Okay.
I honestly don't have much to add on
Sure.
bird flu, but there's one thing I just want to underscore in what Dan said related to not just the demolition of the USDA and some of USAID, and we can all have opinions about that, but about how funding for state land grant universities and agricultural research has also gone away. And so you've got agricultural researchers out there telling their stories about how they've had to stop experiments midstream, or that they've stopped watering plots of experimental, fruits and vegetables, or that they've stopped research into poultry genetics or cow genetics or things like that. those sorts of things are not going to show up in the short term. It goes back to this metaphor that things might look like they're getting better, but there's going to be this latent problem in the system because things have been ground to a halt. We have been the center of not just, we're not just the most agriculturally blessed, fertile region in the world. We're also the most innovative. We're also at the forefront of science and technology and agricultural research and all these other sorts of things. And if we don't figure this out relatively quickly, that's not going to be true in 5 years because the machine is gummed up and all these researchers have stopped working. So again, I don't want to make it political. I hope that this audience knows now that, I'm not here to give you a political opinion. We can agree or disagree about whether that money has been managed properly, whether too much has been given to universities, whether universities spend it properly. Okay, we'd have to open up the bourbon and talk about it. I'm just saying that if you look at the money that is falling away from these areas where we have been at the forefront, and if you extrapolate that over a 2 to 5 year time period, it says very disturbing things about our abilities to anticipate future diseases, to control future diseases, to keep track of mutation of diseases, to make advances, whether it comes to seeds or genetics or things like that. All of that is at risk in some of the way that these domestic policies are being rolled out as well.
Well, Jacob, little did you know, you ran right into the question that I was going to be asking here next. So I think you are just a mind reader here today.
He is a mind reader. Come on.
No, I'm overeager. I've had too much coffee. That's what it is.
No, all good. So you answered kind of the first part of this question, but the second part of the question I think is going to be an interesting area to extrapolate here, because I'll read it as is, but we'll focus on the last part a little bit more specifically. As the question reads, how are the recent federal funding freezes impacting ag research and innovation and long-term impacts on this, as well as food security? So let's talk about the food security aspect of this maybe a little bit more, but feel free to interpret that as you will.
Well, I've said the first, it's not too far gone. This can be fixed. And I'll take Elon Musk at his word. Elon Musk, when he's been questioned about some of the things that the Department of Government Efficiency is doing, has said, oh, when we make a mistake, we'll try to figure it out. We'll try and reverse it. So maybe they are just doing this tech entrepreneur, break things and then fix them. And maybe they'll come back and maybe some of the projects that weren't worth anything will go away and they'll put their arm behind it. But if it's just what they've been doing so far, then it's very, very negative over the next 2 to 5 years for our ability to lead in all of those different forefronts. And that'll be bad for the world. Sort of full stop. In terms of food security, I guess there's a couple different ways I could take that question. Food security in the United States, food security in the rest of the world. In the United States, I don't think we're in danger here of food insecurity. We have some food insecurity because, as I've talked about it, previous business conferences, we prioritize exports and our infrastructure is not good domestically, and we have food deserts and everything else. But those are all domestic policy choices. We are still the most agriculturally blessed country in the entire world. And that's not going to change anytime soon. So if we wanted to have 0% food insecurity tomorrow, we could. It would be pretty easy if you just decided that that was the mission. And even if we shut down every single cent of agricultural research and spending, we probably could still have food insecurity at 0%. Now, the rest of the world, that's maybe a bit of a different question. And there's different ways to think about that. We have been, one of the providers to lots of countries that can't make their own food in large parts of the world. Now, we've lost our status as a low-cost producer from some things. Brazil's already come for the soybeans and corn. They're talking about tropical wheat next. Maybe there are different places around the world that are going to fill that gap. And maybe, with the rise of Brazil and Argentina and technology in some of these other places, maybe you're going to be able to get yields high enough up that you can make the difference for the U.S. focusing more inwardly or not continuing to increase yields as we have in previous years past. But I mean, if you're Egypt, if you're some country in sub-Saharan Africa that's been dependent on importing relatively cheap calories from the United States for the last couple of decades, yeah, you should be sitting up in your chair and thinking about how am I going to replace those calories, whether that's, buying seeds and delivering fertilizer to your own farmers, whether that's sourcing new markets or anything else in between. So yeah, for some of these food insecure regions in the world, which, luckily is not any of us, this could be pretty bad, or it could just be market share for other countries. It's a little too far ahead to see into the crystal ball. But so, yeah, I hope that's a good answer to that question.
And Dan, do you have any insight on that question at all?
Well, we can look back in history, and it's the food and it's those that are impoverished, those people that get with less than $3 a day. I don't care whether they're in Egypt or sub-Saharan Africa or Bangladesh. Those are the first ones that are impacted by tariffs. And so as we think about the world to come, you're going to see a lot more food insecurity. FAO's already on this. They're looking at opportunities maybe to move some supplies in. The Trump administration really told the world that we are no longer the leader in terms of, let's say feed and supplying the world with goods. We were raising debt of $100 trillion every 100 days. And so somewhere along the line that had to end. And I guess with this administration, it did. Now we'll see if Europe and other people are ready to pick up the hoe handle, if you will, and get at it and see if they can supply the needs of those people. But if you're making less than $3 a day, you really have a problem. And food insecurity is something that will be rising rather sharply, I believe, in the next 2 or 3 years.
Okay, thank you for your thoughts on that. One of the other Slido questions here reads, again, straight to the point. Some of these questions, they just want the answers. It reads, when does the market hit 50,000?
50,000 on the Dow, or which market? I guess that's my
It
question.
just left it at market. So interpret that as you will.
It must mean the Dow, right, Dan?
I would have to think the Dow. What are we, about 30 or 41,000 a day or something? I'd have to say 50,000.
We're down 1% today. We're hovering right around 39.
Okay.
I appreciate the optimism of the questioner. I would not be expecting. Well, if there's a phase 2 U.S.-China trade deal and everything looks like it's going fine and inflation is under, like, I can craft a scenario where you get a bubble-like rally towards the end of the year, but I would be cautious of it, and I think the risks are more skewed to the downside. So yeah, I would say hope springs eternal, but my base case would be not anytime soon, and if it does, it's going to be a quick trip up and probably a whiplash trip down.
So Jacob, do we ever find ourselves without any tariffs? I mean, we keep thinking there's going to be tariffs with this administration to the end of the 4 years, and then whoever wins next will have to decide that. But I mean, whether it's 10% or 15%, I don't know. But I'm believing, because of tax programs and deficits, that this administration does see tariffs a little bit as the External Revenue Service. What do you think about that?
Well, yeah, tariffs is the external revenue. That sounds nice. I don't want to pay my income taxes either, but the math just doesn't work. So, like, I don't really understand, like, how that's going to, like, again, unless they're playing three-dimensional chess, and I don't understand, like, where things are going.
And I'm not thinking they're going to pay our taxes completely or anything like that. But this country, like my thing with tariffs is, once you got them on, and once they're on for 3 months, they're very hard to come off. And so once the revenue's coming in, and I see Trump, I don't want to call it tweeting because it's not his system, but he's always saying money's coming in and food prices are going down. And that's been a common tweet for the last few days here. I just don't see him relenting on some of these 10% tariffs.
Well, and to your point, the Biden administration didn't get rid of any of Trump's tariffs from the first term. They extended them and made them sharper, especially when it came to China. But it's not a black swan scenario, because you can imagine it, but sort of my most out there scenario right now is, let's say I'm right about the US economy really tanking towards the end of the year into next year as a result of the long-term impacts of some of these issues. You start getting into the midterm cycle, and you've got, Republican members of the House and of the Senate looking at their midterm elections and seeing President Trump as a liability rather than something that they want to run into. The thing about tariffs is that most of these tariffs have been instituted via executive action. There's a couple that they've done the process and they're legally on the books, but a lot of them have just been Trump is claiming an emergency and he's throwing the tariffs on. The Constitution gives the power to raise taxes and duties and tariffs to Congress, not to the White House. So if Congress wants to grow a pair and say, hey, these tariffs are negatively impacting the United States economy and everybody else, and they're also illegal, so we're going to challenge them and get them to zero, and Congress is going to take back the tariff wheel. And if you want a tariff, you're going to have to do it the way that they used to do it in the 1800s, which is Congress has to approve the tariff. Well, yeah, then these tariffs could fall off really, really fast. But if I say it's an out there scenario, because Congress has been abdicating power and responsibility ever since Truman took the U.S. Army into Korea as a quote unquote police action and went around congressional authority, because Congress is supposed to be the one that declares wars. And how many wars have we fought since then that Congress has not declared? So it is an out there scenario. But if the economy gets bad enough, and if you see Republicans running away from Donald Trump and towards bipartisanship because they're trying to fix the economy, and you start seeing language about, hey, the Constitution gives Congress this power, not the White House, then I think you could get a scenario where you're seeing the elimination of a lot of these tariffs. Probably not the China ones, not any of the ones that were put through via Section 232 or any of these very specific ones where the legal dots were where the I's were dotted and the T's were crossed. But all these other ones where he's just out there saying executive order this, executive order that, yeah, they're vulnerable to Congress if Congress decides to wake up.
No, totally agree. The ones I worry about most, Jacob, are these Chinese vessel taxes, if you will, affecting agricultural trade. These are really big, important things for agriculture. So, a tax of a vessel coming in of $1 to $3 million is very harmful to the U.S. ag economy, even worse than the tariff.
Well, and not just the farmers, like the shipping companies and the energy companies. Like I hear this complaint from a lot of different sectors, and that's why, if you're following the news, the Trump administration's already come down from it. They've already said, well, it might be this, or it won't totally be this, or maybe it'll be a little of this. And that's the type of policy incoherence that just doesn't work for an economy that's trying to figure out what's going on next. So.
Yep. I just want to make sure we added that to the tariff list.
Yeah, it's in there.
Well, I appreciate the discussion. I think it's a really great addition to this conversation. And I think it kind of fits into the next question here, as it reads, with the U.S. now seen as unstable and knowing that this will likely remain for the next few years, could this potentially be repaired in whoever is in office next, or are we kind of SOL? And I added that last part, but that's kind of what I'm gathering here.
I'll stick my neck out here. I think that something irreparable has been broken. I think this is a major change. I think I said this at business conference, maybe I didn't. I think when historians look back at 2025, the most important thing that they'll identify, and they'll talk about the tariffs and everything else, but I think the most important thing they'll talk about is the break in US-Europe relations. The US and Europe, that has been since the end of World War II, has been the bedrock of US foreign policy, has been our primary priority. Like it's been the US and Europe as the victors of World War II sort of pushing against the world. That's broken. EU officials are giving their phones burners when they come to the United States because they're worried about getting spied on by US officials. You've got EU diplomats out there saying, we can't depend on the United States anymore. We don't want to buy their weapons. We're going to spend money to start making bullets and artillery in France and in Denmark and in Poland and other places like that. You've got countries like Poland saying they want to train every single man between 18 and 50 or something like that for potential military service, and withdrawing from international treaties that prevent them from mining the border with Russia because they don't think the U.S. will come to support them if, God forbid, something did happen with Russia. So no, I think something has fundamentally changed. I think countries will be pragmatic if you got a new administration that was open to deals and working with some of these other countries that they would do it. But this era of sort of the United States as the unipolar power where everybody wants to work with the United States, where the dollar is seen as, the safe haven current, all these other things, I think that period is past, and I don't think it's coming back anytime soon.
Okay. I'm going to go back a second here for that last discussion we were having in terms of Chinese vessels, etc., because we had a comment, and I'm curious as to your guys' response here, because the comment here reads, but the cost per ton of freight on those port of call tariffs are low. Do you have any response to that?
The cost of what is it? Go again, Amber. I'm sorry.
Yep. It reads, but the cost per ton of freight on those port of call tariffs are low.
So if you take a Panamax, which is, let's say, 70,000 tons of grain, and you look at $1 million, or take those 70,000 tons and break it over 1 million or 2 or 3 million, we don't know the exact number yet, it ends up being rather sizable. So on a bulk commodity, it is very prohibitive. And what's going to happen is that Chinese vessels will seek out ports elsewhere. 51% of the freight I think I've seen in the world from Clarkston is Chinese made. And so that means that 49% comes back at the United States, and we will only use those vessels as Chinese vessels go over. So our freight rate on everything agriculturally starts rising, putting us in a more disadvantaged competitive position again. So we don't know what has been said in the administration on containers, but if you think about a container vessel shipping dairy products in a refrigerated container, it gets to be very important. And so these are things that worry us because if you're looking at let's say Brazil or other destinations and they don't have the same tax, it's a big deal. Nor do I expect the United States to be building ships at shipyards in the next 3 to 5 years. So this is not something that's going to be fixed immediately, if at all. And remember, under his proposal, within the next 4 years, we're supposed to have all U.S. trade leaving on a U.S. vessel. It's not going to happen.
Yeah, I agree with everything Dan said. I would also just say, and this goes back to, saying something that I said that was sort of abstract, but making it very concrete. If it was just a policy that was, let's say, $1 million per port call for Chinese ship, and that's the policy. Okay, like markets could digest that and work around that, but that's not what's happened. It started as all ships, and then it was Chinese ships, and then a week ago it was, oh, maybe we're going to soften it, or maybe it's going to be part of the negotiations. Like it's not necessarily the actual cost. Like the market can figure these things out. When you move the goalposts every other week, then everybody's just going to sit back and say, okay, I'll wait for the goalpost to settle before I'm going to do and to do everything. And all of the blockages and supply chain over, like all the things that are going to build up as you're waiting for that clarity. Like we saw what happened with COVID or with some of these other things where you get build up over time because things are paralyzed. Like that's where we're at. So for me personally, at least, I think Dan's right about the math there. It's going to make things less competitive. But the bigger issue is we don't even know what it is. We've been talking about it for months and we still don't know exactly what it is. And that's what's fundamentally untenable.
Yeah, yeah, no, agreed, Jacob. But like in a bushel of corn, Jacob, it's about 40 cents a bushel. So if you break it down and you look at 40 cents is a lot of money at a price of corn when it's 10%.
Mm-hmm.
So, it ends up being very, very important to the end users, and they will take it from others or use less.
Okay. I'm going to change the trajectory of where we're at right now and go back to one of the questions that we have from business conference here. And this one I think is going to be a good question for Dan. And it's really let's take the analysis from what you've seen in dairy and agriculture from your lifetime and put it towards what's next, because the question reads, the barrier of entry is so difficult in production agriculture. Where will the next generation of dairy producers come from and how will we transfer?
That's a great question, and it's a capital game, right? You got to be born into it. You can't buy into it very well and scale it if you are a young person, because the dairy industry is all about being a titan, as I call it. So if you think about the future of agriculture, it becomes much more robotic. We have trouble with labor. It's going to be auto steer tractors and things that are robots that somehow weed our fields and milk our cows and segregate our sick animals from our healthy animals and all of these things going forward. So we'll take less in terms of human capital, but it's going to take a lot more in terms of investment and actually capital from a monetary perspective. So I believe that the farms keep getting bigger as they've been going. We'll see fewer of them. And in the end, if you look at some of USDA's modeling, we're left with these behemoths, if you will, across the country. And so the question is are consumers comfortable and happy with that, or are they willing to pay dramatically higher prices for premiums for smaller family farms that they would want to support? And it really becomes a consumer choice more than anything else.
Okay, thank you for that thought on that subject that everybody's thinking about. It's something that'll be very interesting to see what happens in the next 10, 15, 20 years within the agriculture and dairy space, especially with next generations. But I want to be cognizant of the time that we have with you gentlemen. And we've had a great discussion, a lot around tariffs, because that's definitely something that's been on everybody's mind, a lot what's going on in the administration and what's happening globally. But I want to take a second for Jacob and Dan. I want, if you have a moment, what are your parting thoughts, whether that be something you want producers to be thinking about or maybe actively doing, and or just a tidbit of wisdom to give during the last few minutes here. So from that discussion today, what do you want to leave producers to be thinking about?
I'll take first stab at this, which is the way that we consume, and I've talked about this before, but I'm going to keep repeating myself till I'm blue in the face because you get enough of the other side of this. Everything we've talked about, tariffs, the world, I'm fundamentally optimistic about where we are in the world. The media environment is designed to hit the receptors in your brain that get activated when it's like negative news. It's like a drug or it's like fast food. It's literally like that. And I think in some ways the Trump administration has become as popular as it has because it knows the emotional issues to mash on, and it will just keep on hitting that sort of emotional fear button so that people go to them and go to that vision of make America great again, make America build things again. Like I think that's part of the feedback loop process. So I guess the key takeaway that I would have is that, look, we're not going back to the world as it was before. That doesn't mean the sky is falling now. I do have a lot of concerns about the future of American agriculture, the way it's been done for the last 100 years. But I also think there's a lot of opportunity if you're willing to think outside of the box, if you're willing to think about, prioritize which markets you're going to rather than just thinking globally. Think about vertical integration. Think about higher value products. Think about lobbying whoever your local congressman is to try and get some infrastructure so that you can, get things to market more easily that way. Think about how the Make America Healthy Again movement might be an interesting byproduct of how you can sort of capitalize on all those other sorts of things. It's easy based on the information diet that we're getting to just sit in a fetal position and say, I'm just going to wait until things are over. And that's how most businesses are operating right now. I will tell you that I think the ones that are going to do the best are the ones that are going to say, okay, it's uncomfortable. I don't like change. Nobody likes change. I would rather everything just be great. But in this change, in this volatility, there are opportunities at the margins. And if you can slot yourself into those, things are going to go well. And U.S. agriculture is still a fundamental strength for this country. Like it's going to be part of U.S. strength going forward. So if you can be resilient, if you can hold out, and if you can also like be creative and think like opportunistically, like you can just leave tariffs to like sparring at the dinner table and actually doing things that are going to affect things in the economy in real time.
Well, thank you, Jacob. Dan, what are your parting thoughts?
Yeah, no, I would echo Jacob. I'm not as negative on all of this as it sounds, but I still tell farmers the same thing, which is you got to manage your margin. And so we got to stay in business each and every year, and we can't lose sight of that. So when you can make some money, set some targets with milk or crops, whatever it is, 10, 20%, get some sales on. We can always defend them later with calls or those kind of things. So be minding your margin, know when your opportunities are there, because this is a period we need to stay around as a farmer. We need to be there for the better times. They will come again. We will get demand drivers, whether it's from a host of other things internationally on trade or biofuels or others, but it will come. But we just got to make sure that we're there for that day. So for now, we just need to, take care of the turbulence, make sales when we need to, and get some confidence around us in terms from a capital perspective. So we're there for the better times. That's all I got, Amber.
Well, Dan, Jacob, I have to say thank you so much for your time here this afternoon, especially for your candor and insights on an ever-changing world. So it's much appreciated that you spent the hour with us and we're able to kind of recap the last 30 days as well as answer some of those lingering questions. So thank you so much to both of you for your time here.
No, you're welcome.
Cheers.
Jacob, always good to see you, my friend.
Good to see you too, Dan. See you soon.
I also have to say a quick thank you to those who asked your questions and joined, whether you were at business conference or here with us today. It is much appreciated. I also want to say, if you are somebody who's wondering what else is going on in the world of professional dairy producers, you can head over to our website to learn more. But for now, thank you for your time. Have a great rest of your day, and we'll see you here next week on the Dairy Signal. Bye now.